This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report podcast highlights for the second week of January, the week of Monday, January the 9th, 2023. If you've read our annual macrocast, which of course is free at the tfmetalsreport.com website, you'll know we're very bullish for the precious metals in 2023 as Fed policy shifts back toward easing. That's going to help drive all commodities higher, and you can see that in what is happening in copper. Copper's had a great start to the year. It's breaking out, getting back above $3.90 and $4, a sign of Chinese demand, a sign of electric vehicle demand, you name it. Commodities in general, all base metals, are poised for a big year in 2023. And that copper chart was just one of the things we discussed on Monday, January. Back to commodities in general and copper. We spoke about copper, really covered it quite a bit back on Saturday's podcast. Big 2 days last week, Thursday and Friday, charging from near 370 to now today over 4. That's almost a 10% rally in just a couple of days. It'll probably pull back and try to hold 390 as support at some point over the next couple of days. Why? Because 390 had been resistance for a couple of months. In fact, it hadn't been trading this high since June. But if you could say, well, the global economy and all this kind of stuff. Yeah, there's hardly any copper. Remember the LME stockpiles, lowest in 25 years, all that kind of stuff? Remember that chart I put in the macrocast? Copper, zinc, lead, nickel, aluminum, all of them trending down towards zero in the global stockpiles. Okay, what's going to happen as China reopens this year? Copper sensing that, and look at it go. Finally breaking out after 2 months above 390 today. And again, though we'll likely pull back and test it as support, just like when it finally broke above 370 back in November. I think the new floor has been set. It was pretty soon grab a stable toe hold with a 4 handle. And then from begin to move up another 10% as we go through the spring, and into April and May, stuff like that, 440, 450. Okay, copper, again, telling you what's going on with commodities in general. But it's not just copper that's off to a hot start to 2023, and it's not just gold and silver either. Have you seen the mining shares? Great moves to start the year in many of the individual miners, and it's reflected in the GDX, the big mining share ETF. As of Tuesday the 10th, it was already up 11% year to date. It takes a lot of institutional and hedge fund money to move a sector that far, that quick. What is that telling us about the year to come? That's all part of what we discussed Tuesday, January 10th. And then to the GDX. Now this is just, I think these are 30-minute candlesticks, right? But it allows you to see where we closed back on the final trading day of the year, Friday the 30th. That close is 28.66. 28.66. Well, not only did we blast through 30 on the second trading day of the year, we pulled back, tested 30 as support. Now we're almost 32. Remember a couple days ago, it's like, oh yeah, we go to 33 or 4. That's only another 10%, and we just put on 10%. Well, anyway, looking good. Get above those highs from yesterday, I guess. Start trading with call it 32. Get a weak CPI, we could be to 33 pretty quick. But most notably, already, year to date, 6 trading days, 11.1%. You do not move an entire sector 11% in 6 days. And I'll remind you, when we were at 28.66 at the end of the year, that's up from a low of 22.50 in early November. So we'd already rallied 25% in 2 months. And now here's 11% in 6 days. Oh, it's just a blow off. Well, yeah, it's probably due to pull back at some point. But this is a lot of institutional and hedge fund cash coming into the mining sector to get this kind of move here right after the first of the year. About the only thing lagging so far in 2023 is COMEX Silver. Now, it had a great run in the fourth quarter of 22, and that's probably causing it to take a breather. I mean, it moved from $17.50 to $24.50 in less than 90 days. So now it's run into resistance at $24.50, and A lot of resistance at 24 as well. What's going on? What's the deal? That's all part of what we discussed Wednesday, the 11th. Okay, now to silver. And again, remember what I told you. The banks will manipulate price whenever it benefits them. And thus, I thought I would give you this chart today to show you what they're actively doing now. And if you just go back to the fall, everybody forgets how I was telling you about this on a daily basis. We're not going to 14 and we're not going to 12, not when the banks are already net long. Remember, when they get to 20 some odd thousand net long on the COT report? I'm looking at one right now from the end of August. The banks were net long 18,000 contracts, right? Right before short squeeze number 2 that took price from that low of the year at 1750 all the way up to 20. That's 250 on 1750. What's that, 15% in 6 days? And that was the second short squeeze. You can see the first one, and then the second one, and then the third one later in September, and then the fourth one. Excuse me, the fourth and final one that took off on the 4th of November. All right, now I want to show you something here. Notice how the first 3 short squeezes kind of went up to the same area. The first one went up there to about 21. Second one went up to 20. Third one started a little higher, and it went up to 21, almost 21.50. So when short squeeze number 4 blasted through 21 and 21.50, went to 22.50, what'd you expect to do? Well, you would expect it to pull back to 21, 21.50. What had been the resistance on short squeeze 1 and 3 becomes support after short squeeze 4. But then it continues and goes all the way up to 24.50. So where would you look for support now? You should be able to do this on your own. What do you need me to tell you this for? Support would be where that short squeeze petered out in early November. It went from 19 to 22.50 in 1, 2, 3, 4, 5, 6, 7, 8, 9 days. 19 to 22.50. That's 20%. So where would you find support now? Well, we've been talking about this now for over a week. Somewhere near the 50-day, which is at 22.53 and rising, or below 23, 22.50, maybe slightly below there, 22.30. Yeah, if you're looking for a dip to buy, looking for a chance to get long on a trading opportunity and a bounce, that'd be your area, okay? Keep watching for it. Our free Thursday conversation this week, again, this is a podcast we try to do every week. It's always free, public audio. Just stop by tfmetallsreport.com and look for it on Thursdays. This week it was with Tom Luongo. Tom, a long-time site member, going all the way back to the original days 12 years ago. He's built quite a business for himself with his own website, Gold, Goats, and Guns, and he's often cited in financial media, Zero Hedge, you name it. And again, it's fun to call him an old friend. Great discussion with Tom this week. I encourage you to go to TF Metals Report and listen to the whole thing. But here's just a little sample of some of what we discussed.
Let's look at what the Chinese have done in the last 2 months. When's the last time you remember the Chinese telling everybody that they've added to their gold reserves 2 months in a row?
Right. 15, 14, whatever. How a long time ago.
It was 30 tons last month. It's 30 tons this month. But normally what they do is they just say, oh, we went from 500 tons to 1,000 tons. Or we went from 1,000 tons to 1,200 tons. You know, and then they don't say anything for the next 5 years. Now if they go I was just thinking about this. If they go 3 months in a row or 4 months in a row with these kind of 30, 35 ton buys, what are you saying? Like, a lot. Yeah, what they're saying is they are now gearing up and they are now changing they're now signaling to the market that the world has changed. Their attitude towards, assets has changed. And now we'll see what that means. And we'll see how the market takes that.
As the week concludes on Friday the 13th, and as we get ready for another 3-day U.S. market holiday weekend, we note that gold is soaring again, finishing up the second strong week to begin the year, and now up nearly $100 year to date, about 5%. Now, that's a little frustrating when you look at silver, because silver is only up about 1% on the year, but it'll catch up eventually. Gold just looking very strong, and obviously anticipating that change of Fed policy that'll be due by mid-year. All of that we wrote about in this year's macrocast, which again is a free post, and you can find it on the homepage of tfmetallsreport.com. Going forward into next week, though, we'll probably look for some seasonal weakness, if you want to call it that, in gold. We got the front month February contract going off the board in a couple weeks. We'll have option expiration. Those are always kind of pressure the price. Also have the Chinese New Year. That's usually not so good for gold. And then also we're heading into that next FOMC meeting in a couple of weeks. So don't be surprised if gold pulls back here. As you can see on this chart, it's bumping up against what has always been resistance, those old all-time highs near 1920. Set back in September of 2011. That's where we are right now as I record this on Friday morning. And I expect that level to be resistance again, heading into the back half of January, which is usually kind of a tough time for the COMEX price anyway. But it's going to be a great year. We encourage you to join us at TFMR. If you join right now and pick up a new monthly subscription, you can enter the coupon code 2023, and you'll get half off your first month. Makes it only $7.50 to kick the tires for a month. If you stick around, you'll go to $15 a month, that big whopping 50 cents a day. But I think you'll find the site extremely valuable, especially as we enter into what is going to be such a volatile but positive year for the precious metals. So please check us out at tfmetalsreport.com, and please come back next week for another edition of your TF Metals Report podcast highlights. Have a great weekend, everyone.